Hey everybody, Adam Tracy, and wanted to talk about the Synapse saga, right? And the reason why it's important is because it highlights what's going on in the banking as a service industry, right? Vertical. So Synapse was conceived as this banking as a service infrastructure, like the middleman. It didn't have a bank charter. It worked through program banks, but it provided services like ledger reconciliation and all that stuff for neobanks, right? And that worked great, right? Especially at the height of sort of the neobank craze, because there were so many banks, wanting to go get into the business on both sides, and then also offer banking as a service, and then there was a ton of neobanks. So basically, they just served as like the middleman, right? It was like a middleware going back to like the 90s. And so, and it worked. It was great. But over time, right, because you have someone in the middle, as neobanks got larger, in particular Evolve, right, Bank and Trust, and Mercury Bank, they moved away and they went to direct banking integration because it was more profitable for them to do so because they took off. And so revenues declined. And as revenues declined, it almost caused this sort of run, if you will, on Synapse. And more customers went away. And eventually that led to a bankruptcy, right? And you saw platforms like Yada and the like, depositors were left holding the bag. Why was that? Well, what was determined through bankruptcy, right? And I have this theory that whenever something is amiss, bankruptcy is typically where you find it, right? You see people who have been involved in all sorts of stuff, and it's like they file bankruptcy thinking it's like, okay, yeah, great, we're just going to get rid of this chapter of my life or whatever, like it's going away, right? And we don't have to pay anybody. When you get into a bankruptcy, that's where they find everything out, right? And that's sort of what happened here. And so in the midst of this chapter 11 still going on, there was major reconciliation issues, like massive, right? Like tens of millions, almost 96 million missing to date, right? Through all these different, now failed for the large part, neobanks, right? I think Evolve was out like 20 million, that may be the only one that's still there. But the decision that was really rendered through these court proceedings is that obviously FDIC insurance does not apply to a neobank. But it also doesn't apply when losses are caused by a infrastructure intermediary, right? So in this case, Synapse, which was not a bank, right, didn't hold licenses. The reconciliation issues, right, the ledger issues were caused by Synapse, allegedly, right? And like depositors, I keep going back to Yada because I like Yada because they just rebranded as like a gambling app, which is actually quite good, by the way. I hope I get affiliate revenue for that. But in any event, that is not an insurable deposit, right? Even though they're working with their program banks that are licensed and they're just laying their infrastructure over it for the neobank. Well, their losses, the losses allegedly caused by Synapse, do not trigger FDIC insurance. So you had a great number of people left with no recourse other than to be last in line creditors in a Chapter 11, which is never where you want to be. And from a Chapter 11 perspective, which I've done in the ancient past, only about 20% of them are confirmed, the plan of reorganization, and even less than that actually see the plan go through. And there's been multiple attempts to sell it. Nobody wants it. It's hot. Nobody, So the takeaway, right, is twofold. One, these like fintech infrastructure entities can actually negate, right, government level insurance, right, on deposits because of their errors and omissions. And two, where we are in neobanking and banking as a service is directly related to the collapse of Synapse because you had major players involved, and you had very notable neobanks just get wiped out, and all of their depositors are wiped out with them, right? So, from a legal perspective, there's a lot to shake out, but the reality is, like, for a fintech, if you are providing that middleman infrastructure, you can be held liable, obviously, for your errors and omissions. And if you are working, right, with a neobank or banking as a service provider that is utilizing a fintech middleman infrastructure, there's no recourse for them, right? Like, that's not going to be there. The government's not coming in to bail you out. No one's coming to save you, which I like to say. So that is like the ongoing saga of this, right? And this kind of has defined where we are for banking as a service. And I've talked about like the outlook being, like, you see a lot less, banking as a service plays out there, which, in my opinion at least, has a lot to do with what's happening here and the massive amounts of money that apparently have gone missing. So, Madam Tracy, thank you for watching. You know where to find me, adamtracy.io, and I will talk to you next time. Cheers.